Aloha, my name is Anna Covert, and I'm coming to you from my battleship here on the beautiful island of Oahu. This week on the Covert Code, the topic is strategic real estate investment and exit planning. My very special guest is Bryan Watkins, strategic real estate advisor at Trans-Pacific Realty. Bryan has a unique background spanning multiple continents, the UK, Bermuda, Hawaii, and brings with him a very global perspective on all things real estate, high-end residential, hospitality, commercial. He's the guy. He also specializes in exit planning and helping raise capital funds for all those out there who desire to exit their business. Thanks so much for being here today, Bryan.
Thank you so much. Thank you for having me. I love what you do, and I love that you've created a platform to help educate people with their options, resources, and just become better informed, marketing and all that fun stuff. Thanks for having me.
Well, thanks for being here. So get us started. So you are such an interesting background. I like to do the Cliff Notes version for our fans. How did you get from over there in the UK to over here in Hawaii? And what's the Bryan story?
A relentless desire for exploration. So born and raised in the UK, tiny little town, 36,000 people, but it was a seaport town. So that comes with a lot of travelers, stories, and all sorts of fun stuff. So just the sense of adventure. My father's English, my mother's from San Francisco. So just growing up with them in the house as well and listening to their adventures, that's kind of the baseline. Was I just wanted to see the world. And then from there, just being open-minded to see opportunities and make the most of them. So from there, I moved to Bermuda, and with the dual citizenship, having a US passport, eventually I made it here to where we're sitting in your battleship, as it were, in beautiful Oahu. And along the way, just picked up experiences, and which led me towards real estate, finance stuff, and I just had a very keen interest for deal making. How do businesses work? How does the economy work? How does it affect how we live, what we do, behavioral patterns when it comes to investing, buying, all those things. So at some point I was going to have natural touch points towards operational businesses, real estate, those types of things, just based on those interests. Wow.
Yeah. That's fascinating. So do you have a sweet spot in terms of a niche? Is there something that you really specialize in? I know you have to do a lot of things.
A niche, I would say, a business that has a real estate component and an operational business. Small to mid-size is definitely my niche. Bigger companies, they're going to be leaning heavier on, they're going to have a full team, a mergers and acquisition team. They'll be working with a financial institution, their attorneys. Not that small, mid-size doesn't, but often their team will be smaller, and they look to a resource that has a lot of skills in their wheelhouse that they can lean on for multiple parts of a transition. So small to mid-sized businesses with real estate assets is my niche, mostly because that's also my interest. You will find that we often excel in areas where we're genuinely interested, and I love to look under the hood and see, how is this business operating? How can we improve it or help it to transition in a meaningful way for someone who's looking to exit, or a buyer? What can we find that's out there that fits their profile that they can add value to, and find results in what they're trying to achieve as well?
Yeah, I think it's a natural fit because I think a lot of maybe businesses don't necessarily think about the real estate as a critical part of this exit plan. But really, in fact, it could be one of the most important parts. I mean, I think about Love's Bakery, was a client of mine here. I'm not sure how long you've been here, but I was working with them right at before their exit. And one of the things that I think that was a reason that they decided to hang it up, which was very depressing to a lot of people here in Hawaii, was that they didn't own their factory.
Yeah.
And so I think, real estate has always been something where that's really where you can gain value quickly, or, build your portfolio of assets quickly. And also is a key part for a business operation.
Absolutely. And mitigating risk. Because from a buyer's perspective, when you're buying a business, the real estate asset itself, if you can own it, that helps offset some of the risk that the business might have, the operational business. So without that, going into a lease, which is an additional liability, can be part of the challenge, right? With how do you transition this business with all this potential risk?
Yeah, it's a great place to, defer or shadow or whatever we want to call it, brush some things underneath in terms of, operating expenses and whatnot. I mean, it's a natural fit for tax harvesting.
Your line.
Tax harvesting. Yes, exactly.
Yeah.
So, tell me, I know, when you sell real estate for residential, it's a lot different than commercial or these long hospitality in general. How did, what is your recommendation or what's the difference really on if you are selling a business, how long you should be looking in advance of that purchase?
Well, there's three components that I work within for what you just mentioned, the differences between maybe a high-end luxury house, a commercial real estate asset with a business, or hospitality. So what to expect for like a high-end luxury house, for example. The decisions are often made on preference of like, how does it look and feel? So the look and the feel of the property and the desire to be in a specific area, opposed to maybe a commercial business with real estate assets, is often what's the numbers and what's the risk. Not necessarily. I don't really care about what it looks like per se. What's the
that would be funny, actually, right?
I know.
Dirty in his factory.
I'd run that.
Right? That'd be fun.
Someone threw me a curveball. This is what I'm looking for, Brian. I want, these specific
the prettiest
assets.
commercial building ever.
That'd be kind of cool. If there's anyone out there that wants to task me with that would be fun.
And when you say luxury real estate, just so for our listeners, what are we talking about? 2 million, 3 million, 10 million?
It depends on the market, but for Hawaii, then yeah, we're probably looking at 2.5 upward to, here 40 million.
Right.
So we have a lot of different products and different areas of the island where you can still get something that would be considered luxury. Yeah.
Wow.
Yeah. And then it definitely becomes, obviously there's an economical component, but for a lot of people in a certain bracket or net worth, it will come more down to the preference. Or it might be things like, it's the most interesting things. Yeah, it's the lifestyle. It's more on the lifestyle side. And then obviously with the commercial businesses, it's more just, what's the risk? What's the reward? What's the functionality? And then the timelines for those are much longer, because if you just take the building alone, there's just a lot more that goes into evaluating what's the potential for leasing, or what's the functionality or the usage of it. What can we use it for? How can it be redeveloped? Those types of things. There's usually a lot more things.
Yes. So for people who are listening, when they're deciding to invest in real estate with an exit in mind, what are some of the key things that they should be looking for in a property that potentially will return an investment for them?
So let's pick a category. Are we going to go with hospitality, like a commercial, or
with commercial?
Let's go with a commercial.
Yeah, like a commercial.
Okay. So if they're looking for an exit, I would take a look at what's the highest and best use for the space, first of all. So who could potentially, are we asking the question of if someone knows nothing?
Well, I think that there's two parts. Part one is, let's say that I want to invest in commercial real estate. Okay. There's a lot of house flippers out there.
Yeah.
But commercial real estate we know there's a lot of opportunity there. So what are we looking for, in terms of what's going to be a great opportunity to sell it later?
Okay, fun. That helps me with give a more detailed answer rather than broad strokes. So if we was to go out and identify a commercial space for you, like, okay, Anna, here's what you're looking to spend, and this is what roughly the return you're looking for, we'd go and look for what's the highest and best use for the space, who could potentially use this space, and what does the business profile look like in their market? Is it a risky business? What are the margins like? What does it typically yield in terms of, for them as a business, a return on investment? And then that can determine how we structure the lease, which will also, we can relate to the purchase price, which will give you a cap rate, which is basically, a cap rate is how much did I buy this building for? How much did I generate after expenses and income? And how much does that equate to paying off my initial investment. And then what after that, with appreciation and that continued, hopefully, positive net cash coming in, what are you getting out of it at the bottom end when you exit? So we can look at it from the standpoint of like, okay, this business can come in, this is what the typical rent would be, this is how the business operates and what their risk profile is, this is the purchase price of the building, and we're going to plan to exit in 7 years. And then we can map it out. We can literally map it out and then take a look at all the potential risk factors. And then from that, determine which would be the best investment for you based on your profile. Saying that sounds like a pretty good, this is a good system and a method to follow. Finding that is the challenge.
Yeah, I think a lot of times when there's a lot of these shows like the house builders or people are flipping things, and with commercial, I just go right back to my experience with solar. Or we call it like a zero or demand response, right? Or what can we do to make the building more economically, make more money for us, right? And so in a lot of times what we're looking at is we'll go into a building and we'll say, okay, well, how's the air quality of the building? Even that, right? Or is there asbestos in this building? Is there old carpeting in the building that's causing dust? I mean, people don't think about it, but that directly impacts the employee health, and then they get sick more, they're not as efficient, they have foggy minds, right? So some of these factors of like, okay, can we get air filtration? What kind of water is in the building? If we put solar on the building, now if it's a mall or a grocery store, if we add carports or car charging, then we're going to attract more people. If you have a mall and I have a mall and I have car charging and you don't, well, guess who's going to drive their Porsche to my, right? So stuff like that. What are you doing to
Well, absolutely. And then that would come down to the investors. What's their profile and what's their risk tolerance? Do you like a building that has potential to add value in the sense of it's older? So we can go in and we can look at, okay, for one person, they may see risk, another person, they might see opportunity.
Like a historical building, you mean?
Or just an older building in general where the infrastructure might be older and you can add a lot of value. They don't have solar and those types of things where we could look at it and be like, okay, one person might see this as risky, but you have a budget to add capital improvements. And we come in and we do those things, just like what you mentioned. Like maybe there's old carpets, maybe I don't know, maybe there's some of the
lead paint.
Or what? Yeah, a lot here in Hawaii actually. So one person might be saying, I want it pretty much turnkey ready with not too much capital expenses to go in, and we find a good tenant and we do some improvements and we kind of build it from there. And for someone else, they might be looking for something they can put a lot of money into, add all that value, keep it for 10 years, and then have an improved building that has more options to lease or rent down the line.
And let me ask you, so after COVID, it seems that there's a lot of empty real estate, commercial real estate. People got used to working from home and didn't see the value, and rents are, with inflation and whatnot. What are you seeing? Are we going to have like a zombie apocalypse kind of style feel here where there's just so many commercial locations that are empty? I mean, even when you walk into some downtown locations here, it's pretty sad feeling.
It is sad feeling. My thought is, and I can't speak for, there's obviously a lot of people thinking about this, is that I don't think anything's going to remain empty forever. And there will come a point where there's already probably people, I know that I have people approaching me where the risk to reward the balance starts changing, where the prices of maybe a small building starts dropping and people start paying attention, where they're like, okay, now that the price is getting a little more attractive, what could I do? Or people are seeing empty spaces and thinking, what else can I do with this to come into the market? And then it just comes down to often local policies as well. It's if it stayed vacant and a ghost town for a super long period of time, other areas have initiatives to try and entice people to come in.
The state can even take it back, can't they?
Exactly. So there's a lot of things that can be done. So I don't think it will stay vacant forever. But right now, it is a little bit, it's a little sad in our downtown.
What are your thoughts on mixed real estate? So I had one of my best friends lives in Houston, and we were roommates in boarding school. Like, this is how long ago I've known her. But when I first went and to visit her the first time, I had my daughter, she was in a stroller, and I was going to go for a walk. And Hillary's like, "You can't walk here." I'm like, "What do you mean?" Like, "I'm going to take a walk. It's a beautiful day." And she's like, "Okay, well, go ahead." So I start walking, and the sidewalk abruptly ends, and there are like shards of metal coming out of the ground. I was like, "Whoa!" You know, I spun this, and I'm like, wow, because of the mixed zoning. So in Houston, you can, because it's freedom, you know, and do what we want. Texas, there was literally it was a tire company. So there's a residential, and then there's a tire company right there, right? So it's mixed zoning. But at the same time, you know, so I was like, that's really odd and kind of, you know, I'm not sure how I feel about it. But on the flip side of that, you know, we see in some places in Europe where people can live in that building, you know, and that creates a whole nother layer of opportunity. What are your thoughts on that as an initiative to kind of change the structure of real estate today?
I love the idea of having the dual use properties where it's maybe part residential and part commercial, and we're starting to see that a little bit here. There's some of the community out towards Kapolei. I'm trying to remember the name of it. I should know it off the top of my head, but where it's maybe residential upstairs, and then downstairs there's office use.
Oh, awesome!
Those types of things.
Yeah.
Like I'm having a.
Oh my gosh, that's amazing! Like, yeah, I've been waiting for that kind of stuff to happen.
And I believe there's some mixed use in the Kobayashi project, which is coming up on Kapiolani, Kauai Place. I believe they're going to have a little mixed use functionality there, and I love seeing that.
Yeah,
because it makes sense. Because now you can have the resident and the user.
So I think that would change everything, you know, just from a perspective of, is it economical? I mean, and maybe also think about the other side of what we've been seeing in terms of storage units being used for office.
Yeah.
I mean, have you experienced any of that?
I've heard of it. I don't know if you've been to a lot of the storage facilities here in Hawaii. It wouldn't be my cup of tea, but if you know, someone's just being resourceful.
I mean, they're not allowed to, you know, I mean, that's the thing. I mean, I know people own storage units, and that's not how the intended purpose of the, you know, for them to use the air conditioning. I mean, it makes sense. I mean, logically thinking, but then taking this to the next level, it's like, okay, well, why not like embrace that? If people want it, why not embrace? It's kind of the same thing as, you know, low-income housing and in containers.
Right. Yeah. I don't know. I think the storage companies probably do pretty well already. So I'm not sure specifically for that one, but I like where your head's at in terms of repurposing spaces. I've wondered for some of the downtown spaces, having the dual where you can live in and work would make a lot of sense because we do have a housing shortage here for the working population. So if you had a dual working space where a small company maybe had one floor that was residential, and then you also had, you know, the office component. I guess WeWork thought about some of those components back in the day with We Live, We Work, you know, I forget what the other aspect they went down. Was it We Learn or something?
Did you watch the special?
I watched the special.
Oh, it was so good.
Yeah, it was really good. But in terms of thinking outside the box like that, in terms of mixing We Work and We Live type space, that could be a pretty good idea for repurposing some of the buildings downtown here in Honolulu that are vacant, they're not selling, and maybe solve some of the parking issues because someone's living and working right there. Because that's a lot of the challenge downtown is, you know, for example, let's say there's a beautiful historic building on Merchant Street here. Love it. I'm trying to remember the name of the building. I'm sorry that my brain's not firing.
Milani Palace?
No.
Milani?
That would be awesome. Yeah. No. I'm talking right on Merchant Street in downtown. There's this we've got a couple of these cool little, right across the street from Starbucks. You know where the Starbucks is downtown?
I'm trying to visualize it in my mind.
I'm thinking of it might be Queen or Merchant, but it's over there where the Bank of Hawaii is across the street. On the ground floor, there's always been there'd been at different times a little cafe, and part of the challenge is it's all built out. I have people that approach me that want to either expand their operations or businesses just for small little coffee shops operators. I love that space, but there's no parking, for example. And upstairs, there's a few vacancies as well. There's, I think there's a couple of attorneys and financial advisors. But let's say a building like that had mixed use.
Yeah. Now,
all of a sudden, the operator can also, not only if some of the other buildings around had dual function, now you've got a captive audience that maybe you have a little bit more flow.
And how do you get a building to become, isn't it like zoning?
Yeah, we're getting into all sorts of challenges. So...
And what about, not to switch it up too much, but Bermuda? What is how does it work there? And what kind of opportunities can we learn about just real estate in general from that market?
Bermuda is a really challenging market for real estate. For real estate in particular, it's a very small island. So they very much try and protect the local businesses as well, which is something that we have a more open market. It's not easy if you wanted to bring, say, like a franchise into Bermuda, almost impossible. It's going to be a locally owned and operated business. And for buying real estate in Bermuda, the entry point is very challenging in terms of the buy-in to buy there. So Bermuda as a whole is 22 miles by 2 miles.
Wow.
Tiny island. So in terms of the protecting the resources for the local population, I wouldn't be recommending Bermuda unless you specifically, that's where, when we talk about maybe the ultra high net worth population,
yes.
If someone specifically came to me and said, Bryan, I want to buy a place in Bermuda, we'd figure out going through those.
Wow, yeah,
right?
I would never imagine to buy. I thought it was very odd. Like, wow, when I saw that on your resume, I'm like, that's an interesting market.
So Bermuda is more of we utilize Bermuda for being able to help different jurisdictions. So, for example, if someone in Asia wanted to find a tax-efficient way of investing in the UK, you might want to have, if there was a holding company, an instrument that allowed a group of people to invest together in the UK, it might be an advantageous place to have the money come into a company that is held in Bermuda and invest in the UK.
Really?
And that's just in terms of the structuring for deploying, receiving and deploying capital.
It's like Delaware for America.
Exactly. And Delaware is actually used as a feeder fund.
Yeah, okay.
Yeah, it is. Yeah, so it's exactly the same principle. It's where do you want to... So this is where in 2026, not that this hasn't been around for years, but more so now that we're in 2026, you'll see that capital is being deployed all over the place through companies. And then, high net worth families have a real estate portfolio that might span across multiple countries, different jurisdictions, held in trusts and operational businesses. And this is where now these instruments have been in place for years for these types of investments, but more and more so now that there seems to be more money flowing and these transfers of wealth, that as people are liquidating and moving money around, now there's been more of an emphasis of like, okay, how do we do that? How do we not have a huge taxable event in this one jurisdiction and we invest in this other jurisdiction, and then places like Cayman Islands, Bermuda, Guernsey, there's a full list of different areas and instruments you can use to be able to do that. So that's where someone like myself may come in if it's a small pool of people that are looking to work alongside others to find opportunities. Bermuda might be a good fit, like the cost of having a fund that it might be, let's say it's a couple of $100,000 a year, but to be able to structure things properly for each jurisdiction and not get yourself in trouble and pay the right taxes in the right places and hold the money in the right entities in the right places, it makes sense. You don't need to overcomplicate the wheel. If your money's in the US and you're investing in the US, then
Well, it makes a lot. I mean, my mom's Swedish, so I'm a dual citizen with Sweden, and it made it super complicated. Like, she had to sell all of her stocks in Sweden because she couldn't, So I know things can change quickly.
Very quickly.
And so it's important to have lots of different choices and experts. So that's a perfect pivot to tell me about your new company, Avion.
Yeah. So Avion Capital, what we're doing is we're helping with some of these challenges that people are now facing as money's moving around, as people are inheriting businesses and they might not want to operate them. And they're thinking like, oh boy, I want to sell my company in the US, but actually I want to live in Singapore. How do you do that? And how do you want to do it? And maybe there's other opportunities that okay, as you're liquidating these assets, you have hypothetically $2 million, but you want to take advantage of an opportunity that's $25 million. And there's other people that are in similar positions, then it's like, okay, we have a group of people that have the same goals in mind, the same interests, and the same kind of path that you want to walk down. Let's create a structure for you to be able
like a fund kind of.
Yeah, exactly. Mm-hmm. A fund where you can all achieve that together and get the benefits that you're looking for out of that. So, there's so many different ways of doing it, but this keeps it a little bit more personable, where if you have a fund that's a range between 25 and 50 million and you've got less than 20 people that are in there, like it's a pretty isolated and personal fund where you're able to work directly with your experts. We've got one gentleman, Simon, who worked with Robert Fleming back in the day, who was bought by JP Morgan, and he was an asset manager for JP Morgan for years, and our good friend.
So a small little tiny, just kidding.
Yeah, he's great, but you'd meet these people and be able to talk to them directly, right? There's myself on the real estate and operational business side and understands a little bit about these different jurisdictions and different
strategies.
Yeah, exactly. And then we've got some of the insurance coverage from one of our good friends who's also Swedish, who's in California. And then we've also got a political risk advisor who's on board with us, just with the changing landscape around the world.
Yeah.
How things can change so quickly. Not that it hasn't over the years, but information's flowing faster, businesses moving faster, technology's moving faster. So we thought it was prudent. And, our team in Bermuda, who we're working with, said, I'm glad that you've done this. Most funds aren't doing this. And the fact that you have kind of taken the leap to bring on a political risk advisor as you're looking at even some of these smaller opportunities is a really
critical,
great advantage to have on your team as you're looking at things, because in terms of going through the extra portions of due diligence, we can also forecast out as best we can based on the information that our political risk advisor has, whether we think we need to enter a market now, whether we should avoid it for now, whether we should exit out of a particular strategy, where we have someone that's looking at all these extra components besides us just looking at the financial components of what's going on. So the world's just changed so much. The fact it's not surprising right now, but if someone had asked me 5 years ago, do you see yourself having a political risk advisor on your team? Probably not. Maybe I'd touch base with them out of curiosity to see what's going on, but I feel like it's essential right now.
Yeah, no, I agree with you. And, so are you, now that you have this fund, you have one fund, is there some specific type of, again, back to your niche, is there anything that you're specializing in with this fund where you said you have a like-minded investors that are coming to you? Who is this profile, this avatar? Who will be attracted?
Right now we're focusing on, we're looking at operational businesses in Hawaii. So this could be investors from Asia, so Japan, Korea, the UK, or other areas of Europe that want to look at the benefits and advantages of a lot of the operational businesses here that may not have an exit plan, and they have real estate assets with them as well.
Like give me an example.
It could be anything, but so hypothetically, let's take a juice manufacturing business that it might have a profile of a worth of $5 million, and the real estate's worth $3.5 million, would come in, would put some capital into it, looking to improve it over time, hold it for maybe 7 to 10 years. And
so is that because of this depreciation?
Yeah. So portion of that. And then also, is the area likely, is the real estate likely to appreciate? How can we improve the building itself? Can we improve the operation?
Is the rail going to be there? Just kidding.
It's going to be close, actually. But will it be there in our time horizon? Probably not. Yeah, but it would be kind of cool if we did exit, if there is actually plans in that particular example I'm giving, there is actually plans to redevelop that area, but whether we'd see the benefits of that, I don't know.
Yeah.
I don't know. But to answer your question, that's our profile. We're looking at operational businesses that have real estate components as well.
I see.
And that could also be a small boutique hotel, for example. Yeah. So anywhere where we can find a pocket where either someone's trying to liquidate some of their assets for making strategic moves themselves, or it's just time.
Trying to convert debt to equity or equity to debt kind of thing.
Exactly.
Yeah.
Or if they've got a group of investors themselves, if we took on a small portion for a fund and we bought a hotel, there's going to be a portion where we need to exit. And then at that point, you need a buyer. So that money is always recycling into the economy somehow. So, we'll be looking for those. So the way that works is, we might reach out to some of the local banks and other institutions within our network and just ask the question, are any of your clients currently thinking about or talking about exiting their positions in their business within their real estate portfolios? And if so, are they working with someone in your team? Do they have financial advisors? Do they have tax planning advisors? Do they have people on their insurance team? Who's having those conversations? Like we've talked about it. I mean, it could be their CPA that knows that they're looking to sell. It could be their banker. It could be their insurance advisor. So we're trying to find out who has within their network someone who is looking to sell.
What do you think one of the indicators is that someone is maybe before they even know, now with all the AI and digital marketing, it's what are some metrics in your opinion that cue you if you were going to meet someone and you start asking them questions and you're like, they're going to want to sell soon? Do you have those in your thought process?
It's very subjective, but some of the things that definitely come up, you've got the age profile, for example. Mm-hmm. And if you're having a conversation with someone and then they're in it depends on what season in their life they are. But if you're getting the sense that they're running out of steam in terms of their energy levels, their passion, they're spending more time planning their personal side of retirement, but they actually haven't got to the stage, they haven't asked themselves the question or thought about their succession plan, then absolutely that might be an area where I bridge with them, like, hey, have you started to think about how you exit your business? Yeah.
What are the most common ways you think people do? What are the choices for exiting business today?
You've got earnouts, you've got the seller's financing, you've got the straightforward just buyout options, but there's many different ways of kind of slicing that. I mean, it all comes down to when a buyer's looking at it, what's the risk profile? How do I minimize the risk but still get the seller what they want out of the deal? And then trying to bridge those components. So and even for the seller, how do they want it? What are they trying to do? If it's they're trying to retire, or are they trying to get some liquidity out of the business? Yeah,
because most of the time they're going to have to stick around, right?
Yeah. So for an example, there's so many different interesting things that come up. For example, a situation where a business owner, they have the real estate, the business is doing well, they want to get some liquidity out of it, and they want to expand, but they're not necessarily attached to that particular location. They might sell the building, lease back, get the cash out, and then be able to expand into other markets, for example.
Interesting.
Yeah. So, or they might, there's so many different ways of doing it.
Yeah.
But from a buyer's perspective, I mean, if you're transitioning a business, often you want to have the previous owner still tethered to it for a while, because you want to make sure that the business is still keeping the customer base as the transition goes on. It's probably one of the harder ones because it's pretty brutal to have, it's almost like the way I would explain it to someone when they're getting prepared to have someone come in on an earn-out structure is like, right now we're in your beautiful home. It's like, hey, the buyer's going to come in and start moving your furniture around, looking through all the cabinets, maybe painting the walls, changing things out while you're still living in it for the next 2 years. And they're going to be asking you questions about how do you live in the space and maximize it, and what can we do to improve it whilst you're still here, which can be incredibly stressful. And depending on how it's structured as well, you might be asked to improve. So in the business case, improve the business's performance as part of the earn-out package.
Yeah.
In which case now you're technically working for the buyer. So someone who may never have had a boss in that business now has a boss in the form of the buyer. So now you're having to manage expectations, working through a contract, and then also delivering on something to help yourself exit. So it can be incredibly emotional and draining as well. So
a lot of tequila's needed for that.
Exactly. Caffeine, tequila, essential. But, you know, when it comes to actually thinking about selling your business, a lot of sellers, my recommendation would be start as early as possible, even from day one as you're building out your business plan, because all these things are going to become a reality and you're going to have to face them. So often when I'm brought in or someone's referred to me, they've decided like, okay, now I want to sell my business. But now we actually have to go through the process of preparing. It's not a simple case of, you know, your business may be very attractive to you in it. It's like, oh, my business is making money. I've got the real estate asset. Like, this should be easy to sell. We've got 25% profit margins, and it's a great business.
It's catnip
from my vantage point.
Right.
But now when you look at it, when you enter into the market, like, how many buyers are there? Who's ready to buy now? Like, what's the risk profile? How much involvement have you personally had in the business opposed to transferring that over to someone else? Is it turnkey? Is it not? Is it lifestyle business? Like, there's so many components to it that are very, very complicated that now we have to work through. So then it's like, okay, do you want to try and sell the business as it is now? In which case you're going to be offsetting some of that risk to the buyer. So if hypothetically in your market, if your business is worth $10 million, but it's not truly turnkey and there's risk to it, maybe now it's getting discounted to attract the buyer to be able to take on that risk to take it. Or you're going to get stuck to the business for a while. Like, you're going to be in an earn-out situation where the buyer's like, oh, I love the business and whatnot, but I need to make sure it transitions cleanly. So I'm going to ask you to stay involved for the next 2 years, 3 years, 4 years, those types of things.
Jeez.
Yeah.
Sounds like a lot.
Yeah.
So,
I mean, just selling a house in that comparison is a lot easier, right? But I enjoy helping people work through that process on the buyer side and the seller side.
Yeah. It's a very important technique to get into early on. I think it's always starting with the end in mind is critical for brands in general and leaders. You know, I just filmed a special series with Forbes called Authority as a Growth Strategy. And it really is just that leaders no longer can really hide behind their brand or their company for that matter, even if they're the owner of it. And that's part of this exit too. Like, who are you without your company, if it's yours or not, right? And then thinking about the end in mind, what are these little roadmap components that you're going to put into this highway that's going to get you to that thought leadership or impact that you're looking to create?
And I know that I've been talking in very broad strokes because I don't know in terms of your viewership who's meeting this conversation where in the topic. So if it's a new business owner or someone,
I'm very popular in India.
Oh yeah, okay, great. Well, hopefully it's just clicking for someone. There's little tidbits in there where they're thinking differently, but absolutely from the personal aspect as well. Like, you know, someone's personal worth may be very much attached to the business, and then thinking about, what am I going to do now? I've done this for 30 years or 40 years. What am I going to do next? It's something that needs to kind of be planned out as well, because it's going to help during the transitional period take an extra layer of stress and anxiety off the table, because it becomes very real all of a sudden, especially when someone else is in your business and you're more and more becoming less of the authority and the decision maker in it. it changes the dynamics a lot. But if you have something that you're excited and looking forward to, that you've planned with your family or your friends, or, you've gone through, this is what I'm going to be doing for the next 5, 10, 20 years. This is what I'm working towards instead. It could be anything. It could be sports related. It could be purely lifestyle. It could be philanthropic. But being able to if you're someone that has enjoyed and loved doing business for that amount of time, your brain is going to still stay pretty active after that for a while. I mean, bearing in mind, you might crash right after closing and sleep for a month, but at some point, your creative juices are just going to be there and they're going to kick in, and you're going to want to do something. So having that in mind in advance, it could be anything, writing a book, but having that as a real piece of dialogue as you're transitioning your business in the beginning, it might feel a little silly, like, Bryan, why are you asking me these questions? Like, we're trying to sell the business. I don't want to be like, let's focus on the business. This is the important part. But the reality is that the personal side
it matters. I mean, and you're going to get bored. I mean, that's how you stay active. I mean, and there's some other, I think, things to consider there's always, family legacy.
Yep.
And so, okay, I have a company and then my daughter takes it over, right? Can be, there's a lot of challenges there, but it's popular, right? We've seen that.
Yep.
Or it could be employee transferred. So you start to, and that's a great way to motivate and try to be able to withdraw, I think, safely. And, you start to get your core team, because what is the business without the people?
On that note, they're going to get an unsolicited shout out. But I haven't run across a huge amount of them, but you'll talk like an employee stock option plan where a company is owned by the employees. Hensel Phelps, for whatever reason, I don't know why I've been interacting with so many of their personnel. I've been bumping into them out in the wild, as it were, but they seem to have an amazing ESOP setup. So when you talk about different options for selling your business, they can be transferred to the employees. It's a bit technical to set up. It can be passed down to family members, which also has its own challenges. When speaking to other business owners, sometimes all of a sudden the rivalry kicks in.
Yeah.
The sibling rivalry of...
Oh, yeah.
And it's nice to have a team and mediators that can talk through the functionality of everyone's... I mean, ultimately, there's going to be people who are making those decisions, but being able to have a set of advisors that can help walk through the business's strengths, weaknesses, pain points, efficiencies, and be able to help guide each other into practical...
Yeah, and have a plan. I mean, did you watch the Guinness series that came out? Oh, it was fantastic. It was so good. It's like a true story about what happened with Guinness. And when the father, Guinness Sr. died, he put into this distrust or his will that the two sons were going to take it equally, but it was like a non-negotiable. Like they both had to be in it, or neither of them could have it.
Wow.
Right?
I'm hoping that they had a good relationship.
Yeah, it's really, really good. It's a really, really great show. I love historical things, But I think I think a lot of times I hear at least that people are almost afraid to make a plan, because then they think that they're manifesting something negative. Like, oh, if I make a will, or if I make a transition plan, then I'm going to get sick and die.
So often I hear that I wish I had done it this way, or I wish I'd approached you or someone like you or an advisor sooner.
Yeah.
And there's never a bad time to start thinking about these and planning, because, to your audience, I'll be perfectly frank, it's very complicated.
Yes.
It's very, very complicated. It is going to be time consuming. It's going to be emotionally draining. And all we can do is, by planning, is soften that, where it doesn't have to be painful. It can be manageable.
Yeah, I mean, you can plan for it. I think that's really good advice, and especially as the markets turn and things are happening quickly. AI, I mean, there's a lot of instability. There's a lot of excitement. I mean, I personally, think this is one of the most exciting times to be alive.
I agree. Yeah.
And I'm not I was watching something that Elon Musk was on the other day, and he said, he hopes people are optimistic, because isn't it better to be optimistic and wrong than pessimistic and right?
I love that.
I know, and I did. I was like, wow, it's one of the most profound things I've heard him say. I was like, oh yeah, I agree with that. So I think that this is a great time, and real estate is always one of the safest investments to make. My father made a lot of money on real estate himself personally. So, if people want to begin their real estate journey, what's their next step?
If they wanted to, I would just figure out where it doesn't even have to be your interests, but if you're starting your real estate journey, what's practically a place where you can just start and get your feet wet and start learning about it? And don't be afraid to approach advisors and ask questions and learn as much as you can about it. And it could be something super small. I usually like to try and find out what's the person's interest, like where do they find a level of interest in investing. And if they come to me and say, Bryan, I've got absolutely no interest, I just want someone to do it for me, that's okay as well. Like, okay, then it's a case of, where are we right now with your budget? And let me tell you what we can do and what's a realistic expectation for
that risk mitigation, like you talked about. Like, I know of some of our own financial investments, the family, we were looking at when we were doing, with DSPs and whatnot, real estate, kind of funds. It's like, okay, well, what is the risk of natural disaster? So you don't want to put everything in one location, right? You want to spread it out and pick something in the middle of the desert, or it's just that kind of interesting.
So if I was to build out a mini little portfolio right now for thinking small scale and not massive scale, if someone's got some long-term residential property that they're renting with a low cap rate that's got a consistent rental income that has some solid appreciation, and maybe a short-term rental unit that's maybe got a little bit more aggressive rental income but has a bit of risk because policies can change. But so there's so many different little pockets that you can jump into, or smaller apartments that maybe cater to the medical personnel that are transient here, those types of things.
Mm-hmm.
There's so many
like fee simple kind of stuff.
Yeah, even fee simple stuff. There's so many different avenues and paths you can go down. We could talk all day about it. We could do a specific podcast on what are all the things you could invest in Hawaii with different budget levels.
That is fun.
And then we could talk about here's an apartment that's close to the hospital and close to the freeway, and we could target medical personnel and would use this platform, and then we'd go through a little scenario.
That'd be fun.
And we could do that. That'd be super fun. There's many different ways that people can do it. Just start thinking about it. Start thinking about looking at it. And it doesn't even have to be in your area now that it's the world is so global. There's so many different ways of investing now, and there's so many different places to invest. Broaden your horizons and think about, where do you want to live? What kind of lifestyle do you want to have? And how do you want to use those resources?
Wow. Well, I think that's a great place to end for today. Thank you so much for being here. How can people, we're also going to have everything that Bryan's going to tell you verbally, we're going to have it right here in the bottom of the podcast, but how can people get hold of you?
People can get hold of me. The best way is probably reaching out via email. So I'll make sure that I provide that, so you can put it here. But Bryan@transpacrealty.com or Bryan@arvioncapital.com.
Not the water.
Yeah. And then just have an open mind, in terms of if you're looking for opportunities and you try and see opportunities in different pockets and different markets, you'll eventually start seeing patterns and way that economies are moving and working. And if something isn't working and doesn't look like here downtown, it's empty, where's the opportunity in that?
Yeah.
If something's not working, why? And where's the opportunity to have that work? That's my last little kind of add-on there.
Perfect.
Thank you for having me, by the way.
Thanks for being here. This has been wonderful.
Great conversation.
And to all my listeners, thank you for joining us. If you have not yet, please subscribe to the channel. I'm so grateful that we have almost now 120,000 subscribers. That's because of you and your support and aloha. So continue to share this content with your friends and family so I can get more guests like Bryan to come on and share his wisdom with us all. I will see you next week in the Pixels. Aloha. I hope you enjoyed this episode of the Covert Code Podcast. If you're loving the insights we share here, don't forget to follow us on your favorite podcast platform and leave a review. Your support helps us reach more digital innovators like you. Share this episode with your friends and colleagues on social media and help spread the word. And if you're in the solar space or just curious about where clean energy is headed, I'm thrilled to announce my brand new podcast, The Solar Coaster. This show digs into the real stories, trends, and challenges of the solar industry, with bold conversations and powerful takeaways you won't hear anywhere else. Follow The Solar Coaster now so you don't miss a single episode. Thanks for tuning in. See you in the pixels. Aloha.